Welcome to The Business. I'm Rachel Pupazzoni. Coming up on the program, more 737 MAX 8 orders postponed, the global fleet grounded, the disastrous crashes costing Boeing billions. And bracing for the hardest Brexit, will Britons be forced back to the polls on its messy EU divorce? The world's largest plane maker is reeling from two unexplained crashes just months apart. Indonesia's Garuda has become the latest airline to indicate it may cancel its order for Boeing's new generation 737 MAX 8s in the wake of last weekend's crash in Ethiopia, which killed 157 people. That brings the number of orders on pause for the new generation 737 MAX 8 to more than 230. Add to that potential lawsuits from crash victims' families and the grounding of the global fleet, and Boeing is facing a crisis which will cost billions of dollars and its reputation. Andrew Robertson reports.
As investigators continue to sift through the wreckage in Ethiopia, one of the doomed 737 MAX 8's black box recorders has arrived in France. Ethiopian Airlines Flight 302 was the second MAX 8 crash in 4 months, and all eyes are now on that black box to reveal why.
Technically, we should be looking at around 30 days to have a look at a preliminary report.
Boeing is already reeling from the fallout from the Lion Air flight in October, which crashed 13 minutes after takeoff, killing nearly 200 people. And while relatives and friends of the dead count the human cost, attention is turning to the financial cost, which for Boeing shareholders is already billions of dollars.
As long as they're able to fix these problems, I expect orders to continue to maintain their order book.
But there's a lot riding on that fix, and investors know it. Boeing shares are down 12% since Sunday's crash, including the worst intraday fall since 9/11, wiping $40 billion off the value of the company. Why? Because the 737 MAX is Boeing's biggest selling plane, which is why Virgin is planning to bring it to Australia.
I think the 737 MAX is a technological advantage over any other plane flying. It's better than the A320neo. It's better than anything else Boeing has.
Boeing has received orders for more than 5,000 737s, and over half of them are the MAX 8. About 350 MAX 8s have been delivered. So at $122 million a plane, the 2,300 MAX 8s still to be built total $278 billion. That's 3 times Boeing's total annual revenue of just over $100 billion, and that revenue is under threat as airlines line up to postpone. 236 planes are now in doubt, from carriers Virgin, Garuda, Lion, Russia's Utair and Vietjet. But analysts say diversification will save Boeing.
So much of their new business is coming from drones, from the unmanned aerial vehicles, also on the cybersecurity side. It's so much more than just airplanes and so much more than just 737s.
Boeing has form when it comes to faulty planes. In the 1990s, there were major rudder issues on 737s, culminating in 2 crashes in the US with the loss of nearly 300 lives. Boeing was reluctant to acknowledge the problem until another plane, which also developed serious issues, landed safely, allowing the rudder to be examined.
The manufacturer's role is to be totally upfront and transparent in terms of the operating capabilities and any issues that might arise. But in terms of decisions about what should happen with the aircraft flying, that's really up to regulatory authorities.
More recently, the Boeing 787 Dreamliner has suffered from overheating batteries, a potential fire hazard. For now, the world's fleet of nearly 400 MAX 8s remains grounded as Boeing races the clock to try to fix the software problem thought to be behind the 2 latest crashes.
I think they're jumping too quick. I think not every 737 is going to be that way.
An obvious, appropriate thing to do.
Adding to Boeing's woes will be the inevitable mountain of lawsuits which stem from the latest crashes from both the families of the victims and also airlines whose MAX 8s are sitting on the ground. And if orders for new MAX 8s are either postponed or cancelled, suppliers to Boeing will also take a hit.
Boeing produces the airframe. The engines are separate. Most of the stuff inside the aeroplane is produced by somebody else. So you've got a whole supply chain, and the effect of slowing production ricochets all down the line.
One thing that could help stem any loss of business for Boeing is that the world's other big plane maker, Airbus, has an order book that's full to overflowing. With Boeing in full damage control, the immediate fate of the MAX 8 cash cow lies in the hands of French investigators.
Andrew Robertson there. Just 2 weeks out from the United Kingdom's messy divorce from the EU, British MPs have voted to seek a 3-month delay to Brexit. The British Prime Minister Theresa May will now travel cap in hand to Brussels to beg for an extension after narrowly surviving a bid by the Parliament to take control of the Brexit process. But she may not get the unanimous agreement of all the EU members without signing on to a watered-down deal or returning to the people for another vote.
Tonight, Mr. Speaker, I reiterate our conviction that a deal can be agreed based on our alternative plan that can command support across the House. And I also reiterate our support for a public vote.
Meanwhile, the clock is ticking on a hard Brexit on March 29. For more, we cross to Malte Rover-Kaumann at Deutsche Welle in Berlin. Malte, Theresa May is going cap in hand to ask for an extension to the Brexit deadline. What's the outcome likely to be?
Because this process is so entirely unprecedented, it's very hard to say with certainty. But what she's going to do is she's going to ask for either a short extension or a long extension. What has transpired from the EU so far is that they're generally willing to also give it to her so that she can, come up with new ways of organizing this Brexit. But what could really throw a spanner in the works here is that all EU member states, so 27 countries, minus the UK, of course, have to ratify this request for an extension. And if they don't do it, if only one country, has had enough of the shenanigans from the UK or says, we're not satisfied with what they come up with, then it's still the danger of a hard Brexit is looming over this.
The President of the EU, Donald Tusk, is on record as favouring the UK to take Brexit to another vote. Is the UK facing a hard Brexit without taking it back to the people?
Not necessarily, no. There are a number of ways this could go from here. First of all, Theresa May is going to call another vote on the deal she's already negotiated with the EU. That's going to happen next week. If MPs say yes this time round, then the UK could leave the EU as soon as June 30th. If MPs say no, she's going to ask for a longer extension. And if the EU gives it to her, she can come up with new ways of organizing Brexit. And of course, that would also throw up again the option of another referendum, which, however, this week has already been voted down once, so it's not that likely to happen. And of course, as I said before, if the EU does not grant that extension to Theresa May, then it might still lead all to a hard Brexit.
What does all this continued uncertainty mean for businesses in the UK?
It's very, very difficult for businesses because they just don't know what they should be planning with, And you can see that actually in a number of ways, how this uncertainty affects them. Business investment, for instance, has decreased sharply because no one wants to make investments in an environment where they don't know what the conditions are going to be in the next month, 2, or the next year. So businesses are waiting there. You also see that they're stockpiling goods. For the case of a hard Brexit, where all of a sudden they can't get items from the EU anymore. And what you also see is that they're shifting assets to the EU, they're shifting staff to the EU already, or some have just announced plans that they are planning to do so.
Malte Rover-Kaumann from Deutsche Welle, thank you.
Thank you very much.
To markets, which had another seesawing day of ups and downs. The late afternoon rally eventually running out of steam, with the All Ords and the top 200 ending virtually flat. The Aussie dollar is enjoying an uptick, currently buying 70.8 US cents. It's a wipeout for wave energy hopeful Carnegie Clean Energy, which has gone into voluntary administration. It follows months of uncertainty around the company's financial position, which has seen it post big losses and write-downs on the value of its intellectual property. The Western Australian government this week terminated its $16 million contract, which was pitched to become the first wave farm in Australia. Talks are now underway to salvage the business. Global growth forecasts have been trimmed again and now they've been slashed. China and the EU are all downgrading their forecasts as central bankers sit on their hands. I spoke to Credit Suisse Chief Investments Officer for Asia Pacific, John Woods, who warns a recession could be on the cards in 2021. John Woods, the bad news on growth keeps coming with China and the ECB last week, but now a chorus of optimism that the worst may be behind us. Do you agree?
Yes, I do. I think the drivers behind the downdraft in growth that we saw, particularly in the fourth quarter of last year and the first quarter in this year, were largely temporary in nature. We had this very sharp deterioration in the weather, compounded by the government shutdown. We had the emissions scandal impacting auto production in Europe. And we saw some pretty aggressive inventory destocking during the period of the trade negotiations between the United States and China. And all those we suspect will diminish over the second quarter, leading to an uptick in growth in the second half. And this is a central view that we hold at Credit Suisse.
So a moderate pickup ahead then?
Yeah, we're looking at an acceleration in growth, particularly in Europe and Germany specifically. But whereas we might have anticipated weakness into 2019 and 20, we see much more moderate deceleration. And I think this is consistent with the late stage of a growth cycle that we're currently in.
But you've previously said there are indicators for a recession.
Yeah, well, I mean, we are looking at one of the longest growth cycles since 1900. Our growth cycle kicked off in 2009. It's now 2019. If growth continues without recession until the first quarter of next year, it will be the longest period of unbroken growth. So it's almost inevitable that we start talking about the late stage. I don't think recession is a story for this year or even next year, but you know, it's a conversation we need to have in 2021.
Numbers this week saw China's industrial output for the first 2 months of this year slow to its lowest level in 17 years. Its jobless rate rose. That surely doesn't paint a particularly rosy picture for the global economy.
In fact, we are looking more closely at some of the credit metrics from China. These are the forward-looking indicators which give us a sense of future activity. And we're seeing actually two positives. Credit momentum accelerating. We're seeing a decline in short-term interest rates, suggesting financing for particularly the private sector is easing somewhat. And actually, it's our view that over the next couple of months, we will see a bottoming in China's deceleration, some stability, which particularly will be positive for the domestic economy and actually Europe as well.
We've seen central bankers around the world ruling out rate hikes this year. The RBA this week, though, saying that low rates actually inflated the housing bubble here. Is that a danger globally?
Actually, we're seeing a modest correction in house prices globally. From Hong Kong to Singapore to Canada and the United Kingdom. I think this largely reflects a weakness of demand and possibly a supply shock as well.
Where is Australia's place in all of this? We've got a huge housing slowdown, flat wages but low unemployment. Do you think there's any light at the end of the tunnel for us?
Yeah, the strong performance in equity markets since the beginning of this year in Australia, I think are pricing in the likelihood of an uptick in growth in the second half. We are seeing, for example, this rally in the face of still downward revisions to earnings by analysts, and I suspect the market is pricing in the expectation that earnings are likely to bottom and improve shortly thereafter. So whilst the story for Australian growth has generally been negative, and we have seen the economy slowing, and this has been reflected in a range of indicators, nevertheless, we do anticipate a modest uptick in the second half. And by the way, I think that's also consistent with an improving China story as well.
John Woods, thanks for speaking to The Business.
Thank you.
And that's all from The Business. I'm Rachel Pupazzoni. Have a great weekend.